Welcome in, folks. It's a four-piece here today. Buy one, get three free. 4 videos up here for me to react to. First one up here, Nvidia will continue to be in bold position, says Bryn Tarkenton. So we're going to react to that one. I want to share my opinions and perspectives there, okay? Then we're going to react to these folks talking about Nvidia's quarter there. Then I want to talk about Rivian stock. Rivian stock crashing today. Stock down to, oh gosh, I don't know, maybe $12, $13 a share or something like that. So going to talk a little bit about Rivian, react to this, and then the CEO went on CNBC a few hours ago, 3 hours ago, and spoke about where the company's going. So, you know, just kind of thinking about, is there any sort of opportunity in there with Rivian? Is there not? And if you don't know, Amazon owns a huge portion of Rivian, and I own a lot of Amazon stock. So I'm very, interested to kind of hear that in this video here today. Okay, appreciate y'all joining me as always. Thanks so much for being here. All I ask in return is that you smash that like button and make sure to subscribe to the channel. I hope you're having a great day out there. It's a lot of money to be made. I can tell you out there today, man. It's a good one. It's a good one, folks, okay? If you're looking to join my Patreon, I am going to be making moves in there. I'm going to be buying stocks tomorrow. So if you want to see the moves I'm making each and every week, join my Patreon. That's pinned comment down there. You also get access to the Discord chat in there as well, okay? And you get to support my content as well if you really enjoy it. So that's pinned comment down there. All right, guys, so let's start getting into this with Nvidia first and foremost.
Isn't it, Bryn, as Stacy Rascon, as Josh just said, quote, the story, this is what he says today, the story still feels like it has legs. We markedly increase estimates again and take our price target to $1,000. He was at $700, which we asked him about yesterday. He said, don't pay too much attention to my target there, but he bumps it to $1,000.
Yeah, I mean...
Hey. Who put $1,000 price target on Nvidia before everybody else did? Who did it? Who did it? I told you they're all going to do it. They're all coming, man. They're all coming. And just wait, $1,500 price target's coming on Nvidia. You just wait on it.
What's so incredible is if you think about it, if you take a Google, Apple, Meta, Microsoft, and Amazon, what, $12 trillion market cap, when all of these companies get together behind the same theme, which is AI, Nvidia is the recipient of all of that, the majority of that CapEx. And so
it just said a 37 forward P. That's likely wrong. The Nvidia's forward P is probably, as of today, is probably about 30 or maybe 28.
This call, if you haven't listened to the call as an investor, I implore you to go listen to the call. It was like a master class. And this is so exciting because I've just never seen a company that in 2021, they had revenues of like just shy of 17 billion. For 2024, they're going to do 60 billion. I just don't know of a company this size that have had just this catapult. And so investors need to remember the revenues.
That was for their fiscal year, but let's be honest, this upcoming year that we're going into now, they're going to likely do $100 billion, in my opinion.
Earnings are growing really in lockstep with the price. And so I think they're hitting on all cylinders. I will say, Scott, though, if you think about it a year from now, I don't think you're going to continue to see 200% growth year over year because you're going to see that stabilize. But you're still even looking out even further out. This company is probably going to be growing at 15 to 16% a year. So they just continue to be in pole position while everyone else is just trying to ride their wave.
You were calm, cool, collected yesterday going into the number 2. I asked you straight up if you were nervous. You said no. Because you believe in the company, you believe in the stock. They obviously delivered. Jim Lebenthal, I'll go to you next because you also own it. Reasonably new position for you. You were looking for this thing to trade lower so that maybe you could buy more. You're not going to get that chance, or maybe you had it and didn't buy enough.
Else. Yeah, no, I don't think it's going lower from here, but I also think the major point that I would make is that you do have to own this. Now, I know it's a controversial statement. There are some on the desk and others.
I told you guys yesterday, every flip and flapjack and dip in this stock will be bought for quite some time.
On the desk who would say there's no stock you ever have to own, but look, clearly all the oxygen in the room, and by that I mean the cash flows in the market, are going to Nvidia. And fundamentally, there are strong reasons, which Josh and Bryn just pointed out, for that to continue. I said last week, Scott, and you'll remember, I said, listen, you got to own this at 1%. That's a small enough position that on any dips you can add to it. I'm saying that again today. If you don't own it, I do recommend that you add a 1% position to it.
When you look at this compared to your other holdings, so this company, 21% operating margins last year. This year, 62%.
Yeah.
This is unheard of.
I mean,
here's my question. So you look at that and you say, maybe 1% is not correct.
Maybe it should be more.
Well, we all own like some export. We have these companies that are earning maybe like 2% profit margin, trying to scratch nuggets of copper out of the ground.
I'll dance with you. I mean, look, the reason I'm saying 1% is, let's face it, it's up 15% today. And, we can go through the superlatives of its price return year to date, the last 2 years, whatever you want.
I mean,
the 1%,
it was 660. I'll go back. It was 666 yesterday.
Right.
Ahead of the number. I was like, oh, man, that's an ominous number to go into a print on. And now it was 777.
And
so it's up 100.
I'll just close on this from a fundamental point of view, and I know it sometimes drives you crazy when I do this or when Stephanie does this, but you look at the valuation, you're going to say, as Stacey Rasgon just said, it's not expensive. I mean, the earnings estimates are going to go up after this, and it's probably below 30 times forward earnings. You got a growth rate of above 50%. The PEG ratio, price to earnings to growth ratio, folks, is below 1. For a company that is just absolutely knocking the cover off the ball, and the cover and the ball are out of the park.
Yeah. So, Steph, you don't own it. I think people know that by now. You own Broadcom, you own Lam, you own IBM. I put a sad face emoji by your name today in our document today.
It's a humbling business.
Playing a little bit.
It's all right.
On
Stephanie, why do you hate Nvidia?
You were going to say that. Or why am I short Nvidia?
Because
why are you shorting Nvidia,
I think
Stephanie?
this is not me saying this. I'll channel Rascon and say, no one has to own anything. But don't tell me you don't own it because it's too expensive. Because as he makes the case, it's still actually the cheapest of all of the AI stocks.
Well, it's not.
That's Stacey Rascon.
No, it's not. At 32 times, actually, Broadcom's at 27 times. And I think that Broadcom is a great way to play AI. And so that's what I've chosen to do, as well as Lam, as you mentioned.
Come on. I mean, no disrespect to Broadcom, but look at Broadcom's growth rates and NVIDIA's growth rates, okay? The reason, here's the deal in regards to NVIDIA. The reason a lot of people don't own it or are trying to figure it out is just where are the growth rates in the future? And that's very hard to figure out right now because they've been through such kind of a parabolic cycle here. So there's a lot of people of the belief and thought process of like, is this really lasting? Is this like, this year, maybe next year, and then it dies down? Is it something that continues on for years to go in the future? And a lot of people can't really have conviction there, so therefore they can't make that kind of like, a decision to kind of get in or get involved in things like that. It's not as easy as like an Apple stock, for instance, where you can kind of like, you can foresee like, how, this many people can get iPhones and these sorts of things. This is like kind of a little bit further out there for folks. And so, I think that's a tough part. And, even to myself, I'm pretty confident NVIDIA is going to do $100 billion of revenue in 2024 or above. Pretty confident in that. But with that being said, ask me NVIDIA's revenue 4 years from now, and I just really don't have a dang clue. Okay, that's just the truth in regards to that. I can't really gauge it like that. I can gauge a lot of other stocks and have pretty strong conviction on where their revenue is going to be 4 years from now. NVIDIA, I don't know. Like maybe their revenue 4 years from now is 250 billion. Maybe it's like 50 billion, right? And maybe the AI was a bubble and the products didn't take off the way people thought, and I don't know, and so I think that's the hard thing in regards to NVIDIA.
Yeah, and we're going to talk about another name down the road in the next block. But look, the stock is going to continue to work, especially as the hyperscalers continue to show that demand. So it's really durable, and the inference numbers were huge at 40%. That's double what people were expecting. So all that's great. I just feel like I missed it, and I also feel like I have better value for what I see as superior growth, not to Nvidia, but to many other technology companies, especially with Broadcom. I mean, Broadcom is the number 2 AI supplier, $8 billion a year. They're the number 1 custom ASIC player, $12 billion per year. And they have cloud, they've got data center, they've got wireless, they have VMware. And I know you want to have this discussion more about NVIDIA, but I'm just saying that you can own both. No. I don't own both, but I own a good player, and I've had a nice return in this thing.
I appreciate very much your reasoning, admitting, hey, okay, I missed it. You just said I missed it. Yep. But I have these other ways that I can still play the trend in really key players that are cheap on a valuation standpoint, where you can get comfortable around it. Not everybody picks every single stock perfectly.
Okay, I think he was actually making a great point there, and I think it's important I say this to everybody watching this video right now, okay? You don't have to get them all. You don't have to get them all. If you miss Nvidia or you miss Palantir, you miss Meta or you miss an Elf or whatever, like, there's so many fish in the sea. There's so many fish in the sea. There's so many great opportunities for this next 5-10 years. There's so many great opportunities for the past 5-10 years. You don't have to get them all, man. A lot of times people think, like, if you missed one, you suck. No, it's such a false way of thinking, right? No different than you're going to pick bad stocks sometimes. They're not going to go up. They're going to go down massively. You're going to sell for a big loss. It's all part of the process. That's part of being a winner. Like, part of winning in the stock market is realizing you're going to miss some. Sometimes it's going to be you're missing stocks to the upside. Sometimes it's going to be just ones you had to sell for a loss, right? It's part of being a stock market investor. And there's no other way around it. You're going to miss them. Warren Buffett's sold plenty of stocks for losses. Warren Buffett's missed out on a ridiculous amount of opportunities. And look at him. He's done just fine. The only people that try to vilify you for missing it, those people aren't even players. They're not even players in the game. Those are quarterback, on the couch people. They're not even in the game. So their opinions are really irrelevant, right? Anybody with money understands you're going to miss it. That's just the bottom line with that. Next one up here. Let's get into Nvidia a little more, and then we'll get into Rivian.
About quarter, sales more than triple, driven by strong demand for AI chips. Guidance exceeds consensus. This is Jensen Huang on the call last night.
This last year, we've seen generative AI really becoming a whole new application space, a whole new way of doing computing, a whole new industry is being formed, and that's driving our growth. We guide one quarter at a time, but fundamentally the conditions are excellent for continued growth, calendar 24 to calendar 25 and beyond.
Biggest single day market cap move, Jim, beating Meta a few weeks ago.
Yeah, it should be up more. I think that what's happened is you realize, as has often been the case with Nvidia.
100%. I told you guys, if the shorts are lucky, if this stock closes today under 800, because the stock should be $800 today, okay, and it's on its way to 1,000.
2014, that when you see a number, you realize that the stock turned out to be very cheap a year ago. And I think people have to realize, for instance, really some amazing data of when we thought that they were going to earn $20 at the end of the year. In the calendar year, I think that they could now do $24.60. So even in just 6 weeks ago, we thought they were going to earn $4 less than they're going to. And people have to understand, when you're trying to value a stock, what that says is that stock that was very expensive 8 weeks ago turns out to be reasonably valued, and that matters.
So you don't have a problem with Key going to 1,100 or Bernstein going to 1,000 today?
No, I think that what Jensen spent a lot of time laying out when he talked about the notion, remember, we've got two things going on. We have the acceleration computing, and then we have generative AI. What he did was lay out something that people have not been willing to do, which is to say, it's not like the 386, 46 Pentium 2, where the 386 is really obsolete. It's that you can use the H100, the H200, they'll do some new software. There's not going to be a difficult transition. And that was really important because I think a lot of people were worried that there could be a gap, as is the case in a lot of technology. And this is one of the great secular growth stories. Now, remember, he's using trillions. He's basically saying the whole world, everything that we have, which is just general computing, is out of date. So we have to redo everything. If we have to do everything, whether it be auto, you just think, he has said to me over and over again that manufacturing is by far the biggest market in the world. Well, everything that's manufactured will also have to use his chips.
Yeah, and that's why the basket of redoing old data centers, building new data centers, huge buckets of demand. These shorter lead times, Jim, is that a sign of cooling demand?
No, not at all. It's just that finally they've got Taiwan Semi cooking. These things are very hard to make. They're very big. And one of the things that you also talked about is that there are dual uses. So if you're a cloud service provider, you want them for yourself, but you also want them for the cloud. A couple companies that were called out mightily. Meta called out as a monster user of their product. And I thought that was very important because I think people should realize that that's inference. That's why their Instagram ads are so good. Called out Google. Called out ServiceNow twice, saying that they're the ones that have been able to use they've been able to develop generative AI in order to be able to help workflow. The call was magnificent. It was a well-orchestrated call.
I'm trying to see 777 over here. So, yeah, I mean, that Nvidia conference call was a who's type conference call where they were just name dropping big company after big company using their products.
Colette Kress, one of my favorite CFOs, she was a little bit more effervescent. She told me that she thought that was not true, but I could detect enthusiasm from anyone. And then Jensen comes in on the Q&A. Jensen was more Stravinsky last night than he was Taylor Swift.
777. There it is.
He can be Stravinsky. He can be anything. He can be anything.
I want to see
he
777.
Because he may be the smartest man in the world.
Well, the stock has certainly replaced Tesla as the name that trades most dollar volume per day.
Less erratic.
And to your point about the tone last night, this is Jensen Huang talking about growth on the call.
Generative AI has kicked off a whole new investment cycle to build the next $1 trillion of infrastructure of AI generation factories. We believe these two trends will drive a doubling of the world's data center infrastructure installed base in the next 5 years and will represent an annual market opportunity in the hundreds of billions.
So two core things happened on the... One was on the number side, one was on that conference call. The number side, it's obvious what happened there, right? They destroyed it. It was phenomenal. The numbers were amazing, right? We all know that. But there was something very important that happened on the conference call, okay? And I think it's one of the other reasons, is, just one of many reasons why the stock's about to climb to $1,000 to $1,500 here. Jensen on that call, he laid out the future and how many growth prospects Nvidia has over the coming years. And it was important because a lot of people get in this thought process of it's going to end, they're big numbers that are going to end right now. That's what everybody thought in this quarter. Oh man, if Nvidia's, and so this keeps kind of being this thought process about, and probably next quarter it's going to be as well. Ooh, maybe this is it for Nvidia's growth, and maybe the numbers are going to go down now. And then the next quarter is going to be like that as well. And he laid out how this company grows for years to go in the future, not just the next quarter or something like that. I thought that was really important because I think they gave a lot more investors conviction on kind of the story here, right? Now, he could also be wrong in regards to that growth in the future, but it was important he laid it out that way.
Basically saying you've got a couple $1 trillion infrastructure that has to be redone. There's $40 trillion in manufacturing. So arguably everything has to be redone. You have to look at it he says the general computing, which we think of as Intel, has run out. Moore's Law has run out. And so what's happened is that there's no more gain. Even talk about how they're depreciating this stuff longer because they won't put any more money in it. This is where the money is. It's 20 times faster, and yet it burns cooler, which is very important to Jensen because he's anti-waste. It was a dazzling call, and I think that there will be people, I call them Luddites. These are people who wanted to destroy the loom in 1811. They descended from Sherwood Forest, Nottinghamshire, and felt that perhaps it's wrong that we have such a powerful loom that wipes out seamstresses. Well, this company is going to wipe them out everywhere. And by the way, one of the most powerful moments was when they talked about sovereign AI, that we can't just have it be in English. Every country in the world, save perhaps China, has to have its own Jensen, its own Nvidia.
Yeah, that's the sovereign element has been one of his big doctrines last few weeks. Help viewers understand the impact China had on data center in the quarter.
Well, look, he's been saying over and over, and I was joking about it yesterday, that he's going to say that it's great degradation. It's going to not go away, but it's going to decline substantially. But the issue there is that everybody wants them. There was a tremendous amount of talk about allocation and how Jensen's going to give them away fairly. So believe me, the Chinese are going to, their product will be sold. Nvidia disputed this with me originally. When I said, listen, can't you mark that product up that would have gone to China? I said, look, Jim, we don't do that. We don't take advantage of any customer and say, listen, China's not using them, we're going to mark them up 20%. One of the things that they spend, they're very close with all their customers. And one of the reasons they're so close is they don't do that stuff. Jensen's very close with Zuckerberg. I think we've actually seen, I will go so far as to say that you're seeing a Jensen influence in the way Zuckerberg carries himself. Because Jensen is light. He's light. He is not, I'm saying not serious, one of the most serious people in the world.
I think people understand.
But you see, they work very close. They are actual friends. Because I asked him, I said, how often do you speak to Mark? He says, all the time. And initially I said, well, how's that possible? He stands for combat. You stand for peace. And he said, no, that's not that on the surface, but there's a lot of conviviality, congeniality in the relationship. And that's why I think Meta came out as being the number one user in terms of import of their business.
Oh, man, very entertaining. But yeah, I mean, like I told you guys, of my 4 biggest stocks in the public count, right? My 4 biggest positions are Meta, Tesla, PayPal, and Amazon. 3 of those 4 companies are getting their hands on as many Nvidia chips as they possibly can, right? And especially the H100s. That's Meta, that's Tesla, that's Amazon, right? And so that's pretty powerful when you think about it from that context. Okay, let's dive into Rivian here for a bit and see if there's any opportunity in Rivian stock.
Day after reporting results in that production guide, our Phil LeBeau talked with the CEO this morning on Squawk and joins us with more. Hi again, Phil.
Hey, Carl, when you take a look at shares of Rivian, the stock down now 94% compared to its all-time high of $172, which happened shortly after it went public in November of 2021.
Down to 11. Oh, it's down 11. That might be a sign. Oh, my gosh. I didn't know it was down to 11 today.
And take a look at what's really happened here. This is a market where luxury EVs, and that's what Rivian is. It's a luxury-priced EV. It's just not selling right now. Their loss per vehicle in the fourth quarter, 43,372. On top of that, their guidance for production this year came out at 57,000 vehicles. And that's well below where the street was expecting. The street was expecting production guide of close to 81,000. That's incorrect, that graphic there. The production guide is not 66,000. It's 57,000. And as you take a look at their annual deliveries, only building 57,000 means they're not going to be getting close to the mid-60s in terms of deliveries this year. They delivered 51,000 last year. Most are going to have to bring down their delivery estimates. Here's CEO RJ Scaringe talking with us this morning about the changes they're putting in place to lower costs.
Well, here's the deal with Rivian, okay? First off, let me say this, okay? I like Rivian. If Tesla didn't exist, I would probably own a Rivian or 2. But there's a problem, a huge problem for Rivian. There's a lot of problems, but this is a huge problem. Tesla does exist. And so therefore, Tesla's ridiculously competitive with pricing, and they're relentless. And so a lot of people look out there and they say, okay, maybe I'll get a Rivian, or maybe I'll get a Model Y or a Model X. And then they look at kind of the price of the Rivian, SUV, they look at a Model Y, Model X, and they're kind of like, I don't know. Now, Tesla's getting in the truck game. Cybertruck, the most talked about hyped vehicle in the history of mankind. It's going to put a huge dent into Rivian's truck business, at least in the short term, right? In the long term, it could actually help Rivian, but in the short term, there's no doubt it's going to hurt, right? And so that's the trouble for Rivian right now, right? And just ask Lucid about trying to compete with Tesla, right? Lucid can't even get off the ground. I mean, it's a joke. Lucid's talking about 9,000 vehicles produced in 2024, that's like literally nothing. Like Tesla almost produces that much in a day. You got to be flipping my flapjacks, right? But Lucid tries to compete with Tesla, and Tesla has 2 very competitive cars in the market, the Model S and the Model 3. And good luck trying to compete against those.
As we look at 2024, we have a few things playing out. One is we're making a number of changes to the way we operate our plant, as well as our material costs, our bill of materials. And we'll be shutting down the plant for several weeks in the second quarter to make these changes. So that's an interruption to production. And then we're being very realistic just around the overall number of vehicles being purchased at these price points, in the price range of over $70,000.
By the way, shutting down the plant for several weeks in the second quarter, that's been known about for some time. That was not a surprise. That's part of what they're doing in Normal, Illinois to adjust production. Remember, they also make the electric delivery van that is used by Amazon. That's part of the adjustment in production. They will be unveiling the next generation model, the R2, on March 7th. But keep in mind, that doesn't go into production until the Georgia plant opens up in 2026. So we're a long ways from that mass market next generation model. And Carl, their market cap is now a little over $10 billion. Remember after the IPO back in 21, market cap was something like $160 billion. Yep. Higher market cap than GM and Ford together. And a lot of people at that time said, slow down here. These guys are a long ways from getting to profitability. look how things have changed 2.5 years later.
Yeah, I think my guess is with Rivian and Lucid, I think there's a couple of possibilities. One is bankruptcy for both those companies. I think another possibility is acquisition, right? We do know that the traditional players in the auto market have had incredible trouble launching into the EV market, right? So it could make a lot of sense to pick up a Rivian at some point later this year or a Lucid for a very cheap price. You get a brand there that is dedicated to EVs, that is focused on building an EV brand versus, let's say, Ford, that everybody thinks about as internal combustion engine. People are like, why would I buy a Ford electric vehicle? Like what, right? Or why would I buy a Chevy electric vehicle? Like what? Like why would I just buy an internal combustion engine if I'm going to go that route, right? So you need to have brands that are specific in EVs, right? Which obviously Lucid is and Rivian is. And obviously these companies are going to be trading at very joke prices this year, right? I mean, look at how bad the pricing is. And this is in a pretty risk-on market. Is this the most risk-on market I've seen? No, definitely not. That was 2020, 2021, right? But I got to say, this is a pretty risk-on market. And so for these stocks to be at $3 and $11 in this type of market, what happens if, let's say later this year, we have a downtrending market? A Rivian could easily be $7, $5. A Lucid could easily be $1 or $2, right? And so that's where then these companies start to say, gosh, we're not even going to be able to raise capital if we need to raise capital because our stock price is so low. And so that's where maybe these other guys come in and say, you know what, we'll come in, pick up these companies. Yeah, they're losing a ton right now, but we'll build them out over the coming years. And it's better than trying to build our brands. We'll build that brand in the EV space and compete there. And then we'll keep our other brands more focused on internal combustion engine vehicle business, which is where they make their big, huge profits, right? So I think that could make a lot of sense. I think that could make a lot of sense in my personal opinion. I think if you're going to pick up one of those two companies, though, I think Rivian's definitely the more interesting acquisition target than a Lucid. Now let's hear the whole interview by the CEO, and let me see if I change my opinion.
Deep in the red this morning, this after the company reported fourth quarter results, and Phil LeBeau joins us now with the company's CEO. Phil.
Thank you, Andrew. Let's bring in RJ Scaringe. RJ, it was a rough report for you guys. Let's be blunt. Plus, you announced 10% of your salaried workforce is going to be laid off as you guys are cutting your costs. I'm curious, in a general sense, how much has the EV market slowed down in the last 3 months?
Yeah, I mean, we've seen historically high interest rates, and we've, along with a lot of the geopolitical uncertainty, particularly for higher-priced products, in the premium segment, we're seeing the effect of interest rates, the effect of uncertainty, really impact how people are thinking about purchase decisions. And it led us to accelerating the launch of our standard pack to make sure that we have our full portfolio of products available.
So when you look at where the market is right now, your guidance for building 57,000 vehicles this year is well below what the street was expecting at 81,000. Where's the disconnect? Did the market, I mean, we've been talking about the market slowing down. Why did analysts miss it by such a wide margin?
Well, our R1T, R1S products, these are our flagship products. They have been performing really well relative to the market. So we have the best-selling electric vehicle with a price point of over $70,000. And so, as I said, the impact of interest rates is impacting the whole segment, the whole call it premium segment. But relative to the rest, we still have the best-selling product in the market. And so, as we look at 2024, we have a few things playing out. One is we're making a number of changes to the way we operate our plant, as well as our material costs, our bill of materials. And we'll be shutting down the plant for several weeks in the second quarter to make these changes. So that's an interruption to production. And then we're being very realistic just around the overall number of vehicles being purchased at these price points, in the price range of over $70,000. But as far as premium products go, we do have the best-selling EV in the United States today.
Let's talk about some numbers. You lost $43,000, roughly speaking, per vehicle that you built in the fourth quarter, about a $12,000 increase in the amount lost compared to the third quarter. And I know you outlined some of the changes that you're making in terms of cutting your costs. Is it realistic to think that you can get back or get to some type of a profit, positive profit margin in the fourth quarter, given the losses where they're at right now?
Well, if we look at the fourth quarter of 2022 and compare it to the fourth quarter of 2023, we reduced our overall cost per vehicle by about $81,000. And that's a combination of better operation, more efficient operations within the plant, and really improving some of the fixed cost absorption within the facility due to the ramp up. But the other big element here is continued progress on our material cost, and that's all the components that go into the vehicle. And so the shutdown that I just referred to, that we're going to be making these pretty significant changes across the vehicle in terms of cost structure, in terms of componentry, that is going to be a huge enabler for us to get to positive margin. And as we talked about in our earnings call yesterday, we still have confidence and want to be very clear that the fourth quarter of this year, we will be positive gross margin.
Do you have confidence you have enough capital to make it to the R2 and production in 26?
We're incredibly excited about R2. I mean, when I look at the brand strength that we've established with our launch products, the R1T, the R1S, and just how well consumers have responded. Consumer Reports does an annual brand survey, and Rivian came out as the #1 rated brand with by far the highest rate of repurchase, meaning if you're going to buy a vehicle again, would you buy Rivian again? And by a significant degree, relative to all other brands, Rivian came in the number one spot. And so as we think about taking that brand position and now applying it into a smaller footprint vehicle with a meaningfully lower price point, to be able to translate not only some of the brand excitement, but importantly, the significant market share that we've built with our flagship product, we're incredibly excited. So with that said, the organization is heads down focused on delivering to that. The product itself is coming together beautifully. We're going to be unveiling it on March 7th. And that
but
really
real quick,
represents...
RJ, only because RJ, we're running up against a break. I don't mean to belabor this. Understand the strength of the brand and where you guys are at. But to get to my question, are you confident you have the capital needed to get to R2 production, or do you think there's a possibility of a capital raise between now and then?
What we've said is we're very confident in the capital we have supporting operations through the end of 2025. There's a variety of ways we intend to ensure we can launch R2. So there's certainly opportunities to look at the capital markets, but we're also driving efficiency into everything that we do. And the emphasis on driving cost efficiency into operations, into how we deploy capital from a CapEx point of view, and of course, as I said, on the COGS side, on the gross margin side, is the highest focus within the whole business.
So right there, he basically opened the door to capital raise, right? And that's why that stock likely went from then 12 something to $11, right? Let's check where the stock price is right now. Let's check where it is right now. I'm quite interested to see where exactly that stock price is right now. Rivian, let's see. Yeah, 11.30, right? But yeah, and so for a company like Rivian, man, they're just in a really, really tough spot. Really tough spot because, I mean, they're putting up these really bad numbers in a great employment market right now, right? With unemployment in the 3s. It's like, what if that number was a lot higher than this? I mean, gosh, where would that company be in that situation? So just not ideal for that, okay? All right, guys, appreciate you joining me as always. Much love. Thanks so much for being here. If you're looking to support my content, do so on Patreon. Pin comment down there. See the stocks I'm buying tomorrow, as well as future weeks, and get access to the Discord chat in there. That's going to be pinned comment. Much love and have a great day.